Senate Banking Committee today ripped into Jamie Dimon, the head of JP Morgan, saying that his company put shareholders and the whole financial system at risk. But isn't Congress partially to blame for all of this? Ben has the reality check you won't see anywhere else.
Well, the hearing in front of members of the Senate Banking Committee was supposed to look at the risk still being taken by banks like JP Morgan. If you aren't aware, JP Morgan just took a gamble that cost shareholders $2 billion. JP Morgan's chief investment office made a series of trades which turned out horribly, and it resulted in a loss of over $2 billion in 40 days. According to an article from CNBC, the failed hedge likely involved a bet on the flattening of a credit derivative curve, part of the CDX family of investment-grade credit indices. Might as well be speaking Greek there, right? What that means, though, in essence, is that JP Morgan made a series of bets that turned out very, very badly, and it may not be over. If credit spreads soar, JP Morgan could actually suffer a $20 billion loss when all is said and done, which is why members of Congress decided to grill CEO Jamie Dimon today.
When you reduce a hedge or hedge a hedge, isn't that really gambling?
I don't believe so, no.
So this transaction that you said morphed, what did it morph into? Russian roulette?
It morphed into something I can't justify that was just too risky for our company.
And that is the real concern here. Too risky for your company, which is one of the nation's finest, largest, well-capitalized banks. If it's too risky for your company, what stops it from being in the future too risky where you lose not $2 to $4 billion, but $50 billion? Create a size that ultimately creates a risk on the bank that takes that bank into the possibility of a run and then ultimately becomes the collective responsibility of each and every American. That's what we're trying to prevent here.
But are they really? After all, while members of Congress will shake their fingers at banks for taking risks that put all of our money and our entire financial system at risk, it was Congress who gave them the keys to this car. It was 12 years ago when Congress repealed a law that had been in place since the Great Depression. In 1933, the Glass-Steagall bill was put in place to create a firewall between commercial banks, which take deposits and make loans, and investment banks, which underwrite securities. With the repeal of Glass-Steagall, commercial banks were now allowed to play a role as buyers and sellers of mortgage-backed securities, credit default swaps, and other explosive financial derivatives. Basically everything that's gone wrong in the financial system, which began to collapse in 2008. Congress knocked down that wall, gave the banks the ability to take the risk, and then becomes outraged when they prove themselves untrustworthy with opportunity that they shouldn't have been trusted with in the first place. But there is more to this story. Look at what just happened with the bailout in Spain. Spain just yesterday approved a 100 billion euro bailout of its banks. That comes to $125 billion. In fact, Spain's prime minister flew to Poland for a soccer game after the bailout was agreed to, saying the matter is finished. But it's not. The banks in Spain are being bailed out. The loan is coming from some Euro fund, and the people of Spain, the taxpayers, they're on the hook to guarantee that loan. So what you need to know is this. What's happening in Spain is not just a European problem. It is the world banking problem. If Spanish banks do well, if JP Morgan does well, so do executives and so do shareholders. But if the Spanish banks fail, or if JP Morgan risks $2 billion or $20 billion and takes a huge loss, who's on the hook? We are, taxpayers, whether Spanish or American. Because at the end of the day, the system that lawmakers have allowed worldwide is one where we have privatized the profits, but we have socialized the losses. And that is Reality Check.
If you'd like to make your voice heard in the story, head over to Ben's Facebook page. You can find it by searching for him, Ben Swann, WX.